Good evening, dear fellow traders and YouTube friends, and this will be my third vlog on this channel, Filipino Forex Trader. And this evening, it's an important stuff that I'd like to share to all of you. So, being in this community, we are in the industry of high risk investments. Forex trading, namely stocks. But anyway, I haven't started or experienced in stocks trading yet. But in Forex, I've been 6 years, and until now, I don't have any my portfolio of my own. And I have listed here around 6 fatal mistakes that I repeatedly doing for 6 years. In a span of 6 years of trading in Forex, I'm really active in trading Forex from April 2015, and now it's May 2021, so it's around 6 years. And I've listed 6 fatal mistakes that I repeatedly doing. First, lack of discipline. You know what? I can turn like $10 to 80 to $150 maximum several times. From $7 I changed that one or turned that one into around 168 something in 1 week, in 3 days, 4 days. But then the next trade, I burned everything. So what's the problem? Lack of discipline. So I have specific targets, but I keep violating those targets. Once I achieve the target, I keep trading without having any balance in my emotions anymore. And the second thing, no patience. Sometimes I took my trades early, and when the market makes some corrections, then I got already some negative in my positions, and then I keep adding more positions. So I cannot wait the market to finish the correction, and I keep adding positions. And then later I found out that the market keep making higher corrections before it goes back down or goes back up, depends on the trend. And then I lose all the account, all the entire equity. Because, like for example, if you have $100 account, so I'll give you an example, and you trade 1 cent standard lot size, and when the market move against your direction in 50 pips, so that's 500 pips, then that will be something like uh, nerve wracking, especially if you change it into 2 cents. And if you add more um, positions, and especially you trade on spot metal like gold or silver, in which it can move in one direction in one candle that is very huge, up to 100 to 200 pips, 2000 pips, and your account is surely burning. So that's the problem there. No patience. You have to wait for the right timing. And the third fatal mistake that I keep doing is getting revenge on the market. Once I got burned, I got kicked out from the market, then I'll try to redeposit again, just to revenge that, to recover the losses I made. And I am not in my sound mind and judgment. So the problem, I get revenge to the market, and the market is teaching me a hard lesson, back and forth, back to back. And then the fourth fatal mistake that I repeatedly doing for 6 years, not following my trading plan. I have a trading plan early on Sunday for the rest of the week, from Monday to Friday. But I think I could not remember even ones that I really followed the plan. My wife got angry most of the time. She said, "Your plan is really well established. Why you violated this over and over and again for 6 years?" And then my fifth fatal mistake that I repeatedly doing: over trading, over leveraging. I would like to tell you, YouTube friends, dear fellow traders, leverage is a subtle trap that the broker is offering to the retail clients. Retail clients, those who invested in Forex trading under $100,000 below. Most professional opinions would say below $500,000 investment, still it is considered as retail trader or belong to the category of retail. So, and the market is very harsh and cruel to the retail traders. Much more if you have, much worse if you have $10, $50, $20 deposit. So it's inevitable that your account can be burned anytime. And leveraging is a double-edged sword. It is like an opportunity or it could be a curse. So it depends on how you manage and control that. Because in a higher leverage, like for example, I'm trading with XM Broker, their maximum leverage is 1 is to 888. If you use the maximum leverage of 1 is to 888 and their minimum deposit is $5, you can even trade with gold. Gold and silver, the spot metals and the commodities, they require um, big margins, and commodities and cash and futures, they are requiring the very small lot size, like the standard one lot size, but for XM. But for gold and silver, still you can use the minimum, the regular minimum of 0.01 standard lot size. But then the margin requirement is very big. But if you have a leverage of 1 is to 888, then you can trade gold or silver in a $5 investment. But one strike against your position, then your account is wiped out. So that's the scary thing there. And in major pairs like pound, dollar, euro, dollar, pound, yen, Aussie dollar, you can trade around 2 cents standard lot size with $5 investment. So with that, if you got lucky, if you're really a master trader, then you can probably change that small amount into big ones, but it doesn't mean that it's easy and it doesn't mean it's stable. So all possibilities are on the table, so you've got to be very careful. So that's a problem with over leveraging, because you tend to over trade. So if you have $100 equity and your leverage is 1 is to 500, you can trade up to more than 10 cents standard lot size. But if your leverage is 1 is to 50, you have only a maximum of 1 cent standard lot size that you can trade, because the margin requirement for gold, if your if your leverage is 1 is to 50, could be around $35 to $36 margin requirement per 1 standard lot size of your trading volume. So that means you have some extras but cannot compensate the margin requirement for the next one cent standard lot size, because you need more than around $70. You can trade 2 cents if you have the leverage of 1 is to 50. But if you have the leverage of 1 is to 500, then 10 times bigger of the trading lot size that you can trade. But if you have this higher leverage, then your account is more exposed in the markets and during the volatility hours, so you have more possibility to wipe out your account. But if your leverage is quite small, 10 times lower. So I'm giving you a very simple comparison between a 1 is to 50 leverage and 1 is to 500. Anyway, I'll elaborate this one in a clear way with whiteboard, providing some examples next time. So I'm just trying to insert that particular thing, but it could be another vlog. And the last fatal mistake that I keep doing, that I repeatedly doing for 6 years until now, but as I'll be stepping out from this month and I'll be facing another month of June, I'll have already some written and prepared plan, and I will try my best to really follow this one. If I cannot follow my plan 100%, but at least 60 to 70% of the plans that I have written down, that I can possibly follow. And with that, I'm sure my account can still survive, if even if I could not hit the specific targets, but at least my account is surviving. To tell you what, my account for 6 years, I keep depositing money. My account can only last a week. And the longest one, when I was also teaching that time, helping the cancer patient while she was having a chemotherapy session, and I took her classes as a kind of just a kind of help to her, and I made around $434 in 3 weeks from $24. I think that was the longest period that my account is floating with money. But the rest, it only take a week or 2 days, 3 days, and then I lost everything back, feeding back to the market. So now I will try my best to do everything that I will not do these 6 fatal mistakes that I keep doing for the past 6 years. The last one, again, emotionally attached to my trades. So that's the very problem, YouTube friends, your fellow traders. When you are emotionally attached to your trades, you could hardly figure out what you're going to do, especially if your positions are getting red from blue color or green color, meaning you're in profit. You have a floating profit. And later on it changed to red, meaning you're in negative. If you're emotionally attached to your trades, whether it is a winning or a losing trades, if you're really emotionally attached, then you could hardly balance your thinking, balance your emotions, and then eventually you'll have regrets later on. So there are two problems, there are two possible regrets there. Like for example, if you are in profit, and if you are emotionally attached to your trades, and then you exit earlier, and later on the market continue to spikes up or fall like hell, and you'd say, I supposed to get 300% profit, and I exited early, I got only 30%. So you have this FOMO, fear of missing out, and then you get back on another entry, and that moment you get caught by the market spikes or corrections, and then it makes your account turn into red. Or on the other hand, if you have this floating negative, your position is getting red, and you are emotionally attached like me many times, instead of closing manually about my losing trades, I just keep watching the market as it continues to eat the whole account. So don't be emotionally attached to your trades. It could be winning or losing, because if it could be winning, you might lose your head And the same problem. You get excited, you're doing the thing in a wrong way, YouTube friends, dear fellow traders. I hope that you will remember these six fatal mistakes that I repeatedly doing for 6 years. And you can avoid that if you happen to drop by in my YouTube channel and really watch the whole video until the end. So let me repeat again: lack of discipline, no patience, getting revenge on the market, not following the trading plan, over trading, over leveraging. When you over leverage, you tend to over trade because you get excited, and then later on you blow your account and emotionally attached to your trades. So whether you are in a losing or in a winning side, do not be emotionally attached to your trades. So that's a secret how institutional professional traders are consistently performing nice trades each day, each week, each month, each year. Even the revenues are not really that big, but they're really consistent because they are really focused on the capital, the margins. They're not focused on the profits that they're making, they're focused on protecting the capital. That should be the kind of mindset that we retail traders should have. But since we have only a small account, we have only a small deposits, we only have small investments. So we tried so hard to grow this one into big amounts in no time because we love instant things, instant noodles, instant messaging. We love instant communications. We love instant results. That's why Ponzi scheme are really prevailing for the entire world because the scammers behind the Ponzi scheme, the Ponzi companies, took the advantage that many of us are getting weak in terms of money. We are so we are so greedy and selfish that we can even lose everything because we're expecting for a miracle. And it doesn't work like that, YouTube friends, dear fellow traders. So I hope that you have picked something from the fatal mistakes that I have experienced. And it's not that easy, YouTube friends. I have depression in other side of my life, and plus to these particular field that I cannot do the right way. So it adds up and it costs. It almost cost my life, to tell you quite frankly. If you love to watch the 1 hour and 49 minutes, so almost 2 hours video that I have uploaded already. If you have time, if you have spare time to watch everything, to listen from the beginning to the end, you will understand what I mean right here. But anyway, again, I'd like to see you all in the next episode and stay tuned. There will be more, and I'll be back in the next episode. See ya.